In this weekend's report, we're going to give an update to two things. Number one, higher lows are sufficient. Number two, the back test of the 50 MA is going to be a buy. Here are our notes for this weekend. Pause if you need to. I'll come back to them. We have Google kicking off earnings on Wednesday with Tesla. This one's going to beat, and then Tesla's supposed to mess. Stocks are largely mixed this week, but closing at a new all-time high. We're also throttling extreme greed here, resting at 75, just like we were about a week ago. If we look to our system, we have 110 plus ideas here. I've whittled it down to only 7. Berkshire Hathaway, Krispy Kreme's, betting against the NASDAQ, betting against the S&P, betting against chips, UNH, and then Vimeo. Why? The risk reward on these things is fantastic. Very, very high. So if we go here to our notes, even though we know that higher lows are sufficient and it's big tech earnings kicking off, the algo says buy, green dots are green, but here's the note that's important. Here's what I want to explain this weekend because I think a lot of people might not actually have a plan here. So the most important thing for me is that we understand that going into next week, higher lows are sufficient. If you're an investor or a trader, you need to choose your dominant time frame. For me, that's the weekly here. So when I look to the weekly, the earliest that I'm going to get another data point, which is going to tell me that we're not getting higher lows, is going to be on Friday. That's how we get to number 2, or cautiously bearish. Say it with me. Green means go. Yellow means wait. Red means stop. So if we go here to our simple recipe, which it should be in the description, think second or third link, we go to our bull and bear recipe. Once we get a trend change with 3 candles, what happens? We don't need to have anything more than higher lows because we've made a trend change. That can happen early, it can happen late, and the only way we're going to start going down a lot is if we go down a little bit by printing a lower low and closing below. So again, say it with me. Higher lows are sufficient because by definition, we're only going to get a lower low if we start getting bearish. We have to do it twice in a row to really get confirmation here. So cautiously bearish versus fully bearish. That is where, as of right now, we are currently only needing higher lows, but we have a radar, which means that right now, like our system says, like be ready to bet against the NASDAQ, the S&P, semiconductors, and basically everything. So specifically, here is what I'm going to do. Your time is very valuable. And in roughly 2.5 minutes, I think I've given you everything you need. Here's everything I currently own. Here's the column I want to buy or sell on. And for the most part, I'm not doing very much right now. I'll even show you my exact note. Why? Because why not? Let's just go here. So what I mentioned is that, we're on the highway going into cruise control and there's nothing to do. The plan is set. We realized more than 10% profit so far this year. And we're waiting for those inverse signals. So what this really means is this. If you look here to my theme weighting, cash is still my largest position. It's at over 27%. It's at 27.5%. The reason why is pretty simple. Higher lows are sufficient. I don't want to buy the higher low though. I'm already beating the market year to date. I've already accomplished my goal for the whole year. It's only July. How am I going to mess that up? By overtrading right now. So if I go to here and I look at, should I wait, buy or sell? I'm going to deeply regret if I buy and then we go lower. Why? My goal in January was to make 10% by December. I'm already there by July, and I've realized half of it. Oops. If I go here, I've realized 5.9%. I don't want to mess that up. I am much more concerned or worried. Again, I'm going to regret if I mess it up by buying more and it goes lower. Or what if I don't own the stock right now and I buy it and it goes lower? Well, Pepsi went a lot higher. Ethereum went a lot higher. That's okay, right? I'm not going to be Ash Ketchum. I'm not going to catch every single stock. I'm very happy with what I have. And if we go further now, I'm trying to be a little bit more transparent because I think that goes a long way on YouTube. Here's my plan. I'm expecting that my stocks are going to continue to do well. But if a worst case scenario happens, I don't want to be, I'm not going to be unsurprised. I'm going to be less surprised. So if now I'm making jokes about it, right? Guacamole, salsa. If we, God forbid, backtest the 50 MA, which would basically be a correction. Correction is at 10%. I think this would be about 9. If we fill that gap there, 9.2, 9.3%. Man, I'm going to buy that. I'm going to like it. Here's why I would. I'm pre-thinking about this, right? Premeditating. What if we go down? I just showed you what I'm going to regret. Well, that'd be the worst case scenario. If we're going to go down 20% or go into a bear market, we're going to have to go down by 10 first. So what I'm doing right now is I am expecting the best. right? I'm prepared for the worst and ready for surprise. I always want the best case scenario to happen, but it'll be very hard for me to be disappointed unless I do something to mess it up now. So green means go, yellow means wait, red means stop. Maybe you want to smash a thumbs up or subscribe to the channel to see more of these hot ideas or to follow along with my analysis during the week. Here are all my notes as well. So if we go into this week now, higher lows are sufficient and back test of the 50 MA is a buy, in my opinion. Again, I'm not a financial advisor. But if we go here, we're now scratching out the note for Friday and the note for the week. And now we remain in fully bully boomtown by all dips. Very simple. In terms of key catalysts for this week, fundamentally, Jerome Powell speaks on Tuesday. He's speaking in Washington, D.C. We got a lot of earnings. We're getting into the thick of it. Notably, on Wednesday, we got Tesla expected to miss and then Google expected to beat. But remember, a lot of these companies lowered their guidance into this quarter because we had the tariff stuff happening. So red light, green light, yellow, red, green. Let's see what happens here. Pretty simple this week. Here's my profit and loss on the other account too. And the stocks that I mentioned that I want to buy are actually ones that added a lot of return for me. So if I go to say SH, SARC, PSQ, RWM, DOG, if I look back in time, these are stocks that have done pretty well for me. Like I exited these for a loss. Here I got hurt in May, in June. I stabbed it short. You can see that was roughly 2 months ago. I took my lickings and I left because I got trims, which means that I didn't really lose on these. If we look here, buy, trim for 2%, and then exit for 1.7 loss. What does that mean? It was a net positive trade. Risk management is as important as the ideas you have. We also had some losers here, right? Some losers, but going back, I also had some great wins here. Like on SARC, I got an exit for 34%, a trim for 20. That's what added a lot of the returns to my account. So I'm mostly idle right now. You can see it, right? I'm boring. I'm in cruise control on the highway. Why? Because green means go. And I'm an investor. So the earliest that we're going to see a trend change is going to be on Friday. We're going to have to see a weekly lower low and then do it again. Let me just show you the reason why. It's very simple here. If we go to our bull and bear recipe, and I show you that, so we're bullish because we're above all averages. We got a golden cross. We already know that. I don't have to show you that. We go here. We've already done this. We've printed these higher highs and closed above them. So if we do that, by definition, we've changed the trend. There's a trend change. Blah, tongue twister. On average, this leads to 3 candles with 2 lower lows and 2 higher highs, or a potential start of a new trend. So until that breaks, until we don't print higher lows, it means we're not going to print a lower low. It's impossible to be bearish until we at least print the lower low. But then we have to close below it. We have to make an advance and hold it. Then we got to do it again. That's what worked so far this year. I'm going to continue to rely on it because it's also part of what my algo looks for. So if SH is going to go up on the weekly, meaning SPY is going to go down, well, man, this looks like a nice little alert here. It looked really good here too. That's why I bought it. So it looked good right here, right? Oh, yeah. Mean reversion back up to the high. That's really good risk reward. Risk this to make this. Hell yeah. So now we see that same thing happening here. I see another curl forming. And I just told you, if we decline by 10%, I'm going to tactically trade it. I'm going to trade it. That's what this is. It's trading. I am not going to bet against the market. I'm going to wait and strategically deploy my cash. So curl number 1, curl number 2, curl number 3. Those are called dead cat bounces because they're lower highs and lower lows, which lead to what? More lower highs and more lower lows. But the potential's there. All right. So if you want to find out more, come hang out with me at 8:30 a.m. tomorrow. Thanks so much.